Thank you for tuning in. My name is Ruben Cook, and I'm a CPA and a partner at Squire & Company located in Salt Lake City, Utah. This video is about the $2 trillion Coronavirus Aid, Relief, and Economic Security Act, known as CARES. We're making this video as a benefit to our clients, but really anyone in the community who you think can make use of this information, feel free to share it. The intent is to illustrate to you what financial relief resources are available to small businesses, including the self-employed. Some of these financial resources include forgivable loans, low interest loans, and even outright grants for your business. And don't assume you don't qualify, as the parameters are fairly broad, and I'll explain more about that. The intent of this video is simply to provide you the context you need to understand what resources are available to you. But after you watch the video, I'd invite you to go to squirecares.com, and there you will find how-to documents and other resources that will guide you through the application process. Or if you wish, you can request to have someone from Squire walk you through one-on-one. Nothing I'm really sharing with you today is exclusive to Squire. The information is publicly available through different government websites. We have simply aggregated this data and made it simple to follow and provided an easy path to access the financial resources available to you. There are 3 big relief packages that every business should be aware of, and many, many more at the state and local government level, depending on where your business is located. The number one relief package to be aware of is the Paycheck Protection Program, or PPP. This is the most important provision, as it offers $349 billion of funds to businesses in the form of forgivable loans. Businesses with less than 500 employees, that includes the self-employed and nonprofits, qualify for this program. Through this program, you can actually apply and receive the distribution of funds through a local financial institution, such as a bank or credit union. You can request up to 2.5 times your average monthly payroll costs with a $10 million cap. The second program to be aware of is the SBA Economic Injury Disaster Loan, or EIDL. This program provides up to $2 million to cover working capital or operating expenses of a business. This is also available to businesses with less than 500 employees, including the self-employed and nonprofits. The nice thing about this program is it includes a $10,000 grant that may be available to you within 3 days of completing the loan application process, according to the government website. You can get approved, if you prefer, simply through your credit score, and if you request less than $200,000 in funds, there is no requirement for a personal guarantee. The third financial relief package to be aware of here in Utah is the Utah State Bridge Loan, which is an $8.5 million fund to provide loans to Utah-based companies that have fewer than 50 employees and can demonstrate that they've been negatively impacted by the pandemic. The loan amounts under this program range from $5,000 to $20,000 with terms of 0% for 60 months and the ability to defer loan payments for 12 months. There are some caps based on the financials of each company. Finally, just as a reference, I want to make it known that there are many other provisions available to businesses than just these 3. There are tax credits available for businesses who have had to suspend operations, for example. There is the ability to defer payroll tax payments over the next 24 months. There are other relief packages available through state and local governments all throughout the U.S. I am focusing on the first 3 as those are the most generally applicable to this audience. Let's go into just a little more detail about each of these 3 financial relief packages. Let's start with the PPP. This is novel in its own way because the government is executing this program through financial institutions, not only SBA qualified banks, but also through credit unions, and even fintech companies like our local Lendio are participating in the process. These financial institutions not only facilitate the application process, but are going to be the source of the distribution of funds. The Paycheck Protection Program creates a type of emergency loan that can be forgiven when utilized for qualified business expenses. The basic purpose of this program is to incentivize businesses to retain employees and or hire laid off workers that lost jobs due to the pandemic. Okay, so how much can you borrow? Well, up to 2.5 times your average monthly payroll costs from the prior year, with a $10 million cap and some limitations of how you calculate your payroll costs. These payroll costs can include salaries, wages, tips, payroll taxes, benefits, sick leave, PTO, health insurance premiums, retirement benefits, and so forth. Well, who qualifies? Well, businesses with less than 500 employees, the self-employed, sole proprietors, nonprofits, and a few others. There are some exceptions in the size rule for certain types of companies. And obviously you must demonstrate there was some negative impact to your company due to the pandemic. Well, how does the loan forgiveness work, right? That's the best part. Well, the loan amounts will be forgiven as long as the loan proceeds are used to cover qualified expenses for the business, and I'll get to that in a second, over the course of the 8-week period following the loan approval process. And companies must maintain a certain level of employees and compensation levels, as that's the purpose of the loan to begin with. By the way, the loan forgiveness process is also simplified because that will also be executed through the financial institutions qualified to support this process. So what are the terms of the loan? Well, there's no collateral necessary, no personal guarantee. The loan can be used to cover, again, these qualified business expenses, which include payroll costs and benefits. They also can include facility-related expenses if the contract for that facility was initiated prior to February 15th, 2020. It includes mortgage interest, rent or lease obligations, and or utilities related to that facility. Now, you can still take out the loan even if the funds are not used for these qualified business expenses, but you will need to pay an extremely low interest rate from the Treasury, and you have 2 years as a term for the loan with early payment allowed. Okay, so how can you apply? Well, if you're a small business or sole proprietor, you can begin applying April 3rd. That's right around the corner. If you're an independent contractor or self-employed, you can apply April 10th. All applications must be submitted by June 30th, but frankly, do not wait that long. There are limited funds. You'll want to be the first one to apply. Now let's dive in just a little bit deeper regarding the SBA Economic Injury Disaster Loan. This program provides businesses with up to $2 million in loans to cover working capital expenses. This is also available to businesses with less than 500 employees. This includes the self-employed and nonprofits. And as a reminder, this loan can be applied for using the applicant's credit score, and there is no requirement for a personal guarantee if the loan amount is less than $200,000. So who qualifies? Well, one note here is that you are allowed to apply to the EIDL even though you've applied to the PPP. However, there are provisions that restrict double dipping for the same expenses. So ideally, you need to be very careful about not expecting the same expenses to be covered from both programs. Your business needs to have been in place for at least 1 year, and you need to have demonstrated that you felt an economic impact due to the pandemic. The best thing about this program is the $10,000 grant. Now, according to the guidance, this grant will be made available to you within 3 days of completing the loan application process. The $10,000 does not need to be paid back. It is a grant. However, to maintain the grant, the funds must be spent on certain types of expenses. including maintaining payroll, but also may be used to due to increased costs for supply chain disruption, mortgage release payments, or repaying obligations that would have been able to be paid without the pandemic. A few key terms of this loan is it's 3.75% for businesses, a percentage less for nonprofits, payment terms up to 30 years, and the principal and interest deferral is available up to 4 years. This is a great option for certain businesses and one you should definitely be aware of. So finally, the Utah Bridge Loan. Again, the Utah Governor's Office of Economic Development is offering this $8.5 million fund to provide bridge loans to Utah-based small businesses with fewer than 50 employees and have been impacted by the pandemic. Again, loan amounts range from $5,000 to $20,000 with 0% interest up to 60 months and the ability to defer loan payments for up to 12 months. So receiving other forms of emergency relief, such as the PPP or the SBA loan we just discussed, do not preclude someone from receiving a Utah Bridge loan, but a company must disclose that such emergency funding have been requested. Who's this for? This is for companies facing economic hardship due to the COVID pandemic. Okay, and there are many examples of what could cause this hardship, but there are some preference given to companies that can demonstrate that they have specific hardship due to the pandemic. Preference also given to companies that are an integral part of the supply chain network within the state of Utah, companies that pay above average wages and employ a high percentage of full-time employees. There are criteria around this loan approval process related to business operations need to be in place prior to January 1st, 2020. Applicants need to have had paid payroll taxes, so in other words, need to have had W-2 employees. The applicant needs to provide pro forma financials for 6 months that demonstrate the economic hardship due to the pandemic, and a few other conditions. There are no collateral requirements for this loan, but there is more detail available to you as you, again, go to squirecares.com, and you can receive more detail about how to apply for this and how to qualify for this bridge loan. In conclusion, thanks for taking the time out to learn a little bit more about the relief packages available to you. That should give you a little more context. Again, I would direct you to squirecares.com, and there you can receive more hands-on guidance about how to apply for these loans and financial resources, and or request a Squire employee to help you through the process. Thanks for your time today, and good luck.